Hello, this is Patrick White with your Wednesday, April 15th, 2026 market update. And as you know, there is significant risk in trading futures and options, but that's what you got me here for. And on Wednesday's closing trade, we had corn up 8 cents in the July contract, closing at 460 and a half. We had July beans up 10 and a half cents at 11.83 and a quarter. And then if you look at the soybean products, we had May meal up 470 and up 390 in the July contract, closing at 331.20. And then soybean oil, the lead month there was May up 116 points, with July up 109 points as well, closing at 67.31 there. And then we had just nominal gains for wheat. And so the ongoing storyline is still the conflict in Iran. So right now, Israel and Pakistan have been said to been having talks, and they've been successful. And I guess the U.S. and Iran are looking at going back to the table here in a couple of days, or at least that's the latest news. Obviously, this could change just with one tweet. But overall, the market is expecting that cooler heads are going to prevail here, at least for the short run. All right, so taking a look at what outside markets are doing here, we've basically seen a risk-on trade early on this week, with crude oil seeing pressure down about $14 from its high here made on Sunday night, and that's in the nearby contract. The U.S. dollar index has also had pressure, and it reached its 50% retracement here today after making its high just on the 31st of March. So that was a pretty fast slide there for the U.S. dollar index, and that's been supportive to commodities. And then over here on the right-hand side, we've also got the 11th day of a renewed uptrend in the S&P 500, and the S&P 500 is now higher on the year. So it's just been a very risk-on trade here for the stock market, and then also with the pressure in crude oil, and then the lower price action that we've seen in the dollar. Okay, so today we had the NOPA crush report come out at 11 o'clock, and that report showed that we crushed 226.16 million bushels of soybeans last month, and that was up 8.3% from last month, but up a whopping 16.3% from March of 2025. So that's huge. Our crush continues to be really, really strong. We had an expected jump to 229.97, so it was still under the expectations, or at least under the average expectation, but it also, still didn't really knock the wind out of the market either. We still closed on its high, and basically the soybean oil stocks, that ended up reversing from being lower on the day. They ended up being 116 points higher here in the May contract, but those stocks came in at 2.039 billion pounds. But the estimate there was 2.173 billion pounds, so that was towards the lower end of the estimates, and that still signals that biofuel demand is still strong. So I imagine that's what led soybeans higher. And then also we had meal like $4.30 higher or so on the day. That's been near contract highs here as Argentina has had a delay in their harvest, and that slowed down their crushers and their exports of meal as well. So on the corn side of things, we've also had good demand here on the ethanol side. That got updated today. We had 1.12 million barrels of production per day last week versus 1.116 a week ago, so still really strong numbers. We did have an increase of stocks of about 600,000 barrels as well, but nothing that's glutton some yet. And then another thing, too, on the corn export inspections. So we're sitting like 35.5%, 36% higher than last year on our corn export inspections. So our export program continues to be strong. The slide in the dollar over the last 2 weeks continues to support things. And I think that's why we saw corn close near its high today, up 8 cents. So looking at the chart here on the July corn, you can see that we made this low right near this 450 level, and we ended up closing above this 8 exponential moving average, this red line right here. And that was right around that 457. So we ended up closing here at 460 and a half today, up 8 cents even. I think in the short run, the market's going to be looking at rallying up towards this 466. I believe that's a 20-period moving average there. And there's a lot of convergence there, and there was also a lot of choppy, supportive type of action right around that 466 level. So I think if you're looking for the long side, I think you're looking to buy right around this 455, 456. Now, of course, this is not a recommendation, but I think if you're looking to be long, you're looking for a setback in there towards that blue line, 455 to 457, and then for a rally up to 466, and then possibly up to this next standard deviation band on the Bollinger Bands at 475. I think those are pretty realistic targets, and I think that lines up in accordance with the value that we've had built in the past. I mean, as you can see, this is kind of the average. This 475 was sort of the average on this rally, in basically the month of March. And then we also built some value down here at this 466 level as well, and that coincides with the 20-period moving average. So obviously, everybody wants to keep their eye on this 450 level right here and make sure that holds. If that doesn't hold, we're probably looking at going down to test this low down here towards like 441. Going on in here to July soybeans, we're still sort of stuck in this trading range between this 1155 or so up to 1175 to 1180. The Bollinger Bands are really doing a good job of constricting, and right now the market's just acting like a spring. It just goes up and down and up and down and up and down and up and down, and we're generating a lot of energy inside that range. When we end up breaking out of this channel, there's going to be a pretty large move. What that probably looks like is going back towards this $11.95 to $12 mark in the July soybeans up here, or going down and taking out this 1140 area and possibly going all the way down to like 1115 to $11. So basically right now the market's just sort of spring loaded, if you will. It's just been trading inside of here ever since we've had this limit down day in early March, in that first week of March. So we've spent a considerable amount of weeks. This definitely bodes watching. If we have a breakout in either direction, and it's not a false breakout or anything like that, it definitely bodes watching here for the soybean market. Thanks for watching the market recap this week. If you want more content and you like what you see, go ahead and sign up for this content to get sent to your email every day, and link in the comments. Thank you.